Hello, this is Seewing Yee from the Diligence Network. What I have in front of you is a special guest for my Buffalo Turnkey partner. His name is Keith Kanazi. And Keith, thank you for uh, presenting on today's approximately 30-minute presentation, give or take a few minutes above. And the purpose of this recording interview is just to go over the Buffalo turnkey process, and a lot of it over the past few months. We I have addressed some additional questions with respect to buying turnkey rental properties in the Buffalo market with the which is with your company. And so we have several questions, and do the best you can. But before you begin, Keith, can you, from a high level, quickly share with the audience what is your company's background in Buffalo and your investment philosophy, your core value, if you have any, from a big picture. I mean, what your track record and how long you've been in business. I mean, those are a real nice intro. Go ahead, Keith. Good.
Sure thing, and thanks for having me on your presentation here. And yes, I've been an investor in the Buffalo and Niagara Falls area for over 25 years. Been buying properties. I own quite a few as rentals, and I also do, my main business is buying and selling. And we buy approximately 15 houses per month at different, and they're different types of houses. They're up to 150,000 down to houses in $35,000 when they're ready to sell. So there's quite a range of properties that we buy, and we're very good at finding deals. I mean, I've been doing this for a long time, and I have a lot of contacts in the area, and so our main thing is to find the deals. We have 20 plus employees that help with doing different extensive rehabs on the properties. Not all the properties are rehabs. Sometimes we'll buy them and they're already tenanted, and we sell them that way. So we will let people know that this one is, the condition that they're in. The price will reflect the condition of the property and the tenant situation. So the prices vary quite a bit. And we also set people up with a management company for the Buffalo areas. We use our own management company. And for Niagara Falls, we outsource the management, but it's a company that is already managing all the properties that we sell in Niagara Falls. So there's really a very simple process as to buying the property. The tenants don't even know oftentimes that the property is sold because the management doesn't change. If you're buying remotely, it's nice to have the same management. In any case, when we're selling the property. And as far as the types of neighborhoods we buy in, like I said, it varies depending on the price of the property that you're looking at.
Yeah, good, very good, Keith. Sounds like you've been working with out-of-state investors for a number of years, not only from overseas but throughout the U.S. And of course with our investors in California, in San Jose area, in the Bay Area. So we have several recent closings of our investors, and I spoke with them. They are happy with their experience working with you, and everything has met their expectation. And we look forward to sending you more of our investors to buy your turnkey Buffalo cash flow properties. And thank you. Sounds like you have a great track record. So without further ado, I know you're real busy, so let's go to some of the questions. You addressed one of them already, so let me ask you quickly another question. So this question is: since many of these homes are built in the 1920s and through the 1950s and 1960s, what are the potential long-term maintenance and upkeeps are expected of an investor owner down the road, few years down the road? So can you share that with us?
Uh, yeah, well, much of that depends on how much rehab was done to the property. I mean, in some of the properties we're putting in all new PEX plumbing, and others we haven't done that. So really, it depends on exactly how much we've done. If we put a new roof on, or if we've put on a new electric system in, which most of those we have done. So really, it depends. I think Seewing, most of your investors are getting an inspection, so they'll kind of know what the long-term prospects are as far as anything that might be required down the road. I mean, some of the houses may have older windows, so that might be an upgrade that might be done. We do change the windows in some of them, and others, if the windows are still working, we'll leave them. So that might be something in an older home that down the road, if it still has some older windows, you may want to replace those. Most of them, in terms of the exterior, a lot of them are vinyl sided, or they've been freshly painted when we sell them. So there's not a lot of exterior maintenance needed at any time soon. If they're painted, I mean, you can expect to have to paint it again in another 8 years or so. And we try to do work with our investors to give them a good price when any of this maintenance is necessary down the road.
What are the biggest, Keith? What are the biggest potential costs that might come out of pocket for an investor owner, such as, for example, maybe 15, 20 years later, having to replace the roof? What's the worst case scenario that can happen with the property? Like about the electrical system, what are the costs associated with come out of investors' pocket with the replacing the roof or changing the electrical system, the heater or the boiler, or and other potential financial issues down the road? Like I said, 10.
Yeah, I mean, we try to make it so that there's nothing needed within like the next 5 years, but you never know. Something can randomly fail. We may look at a furnace and say, well, this has 10 years left on it, but you never know. I mean, it could fail in 2 years. And if a furnace goes, we're looking at probably $1,800 to replace the furnace or less. Electrical, almost all the properties we sell, we already upgrade the electric service, so that wouldn't have to be done. They are still some older wiring within the house. Is potential that some of the wiring, but that's not usually the case. We don't usually have too much trouble where we have to go rewire a house or anything, but maybe a fixture might have a problem and we have to change the fixture or something, but that's not a big deal. Roof is an expensive thing. A new roof, depending on the house. I mean, you're looking at $7,000. It could be down the road to replace that. If it's simply where we just got to take shingles and go over the top of the roof, it could be only $4,000 or $4,500. If we have to shave off the existing roof, then you're looking at about $7,000 for that. You have something here about foundation issues. Typically, that wouldn't be a problem. The foundations are usually pretty good, and as long as you don't allow water to get into the foundation, and which can cause some damage, the foundations are usually we don't have a problem with that. And like I said, windows could be somewhat expensive. A new window could be installed maybe $200, two and a quarter. The main thing is to maintain the property. If you maintain the property, don't let water get in and rot wood or anything like that, like a porch or something, then you shouldn't have too many issues.
Right. Yeah. So Now, some of the potential investor fears is that, the cash flow right now, the cash flow analysis that I've been showing them, also on your inventory report is, it's very attractive. The cap rates, the monthly net cash flow, depending whether they buy cash or financing, but all the numbers looks good. But the fear is, it's nice to have an upfront. Uh, Definitive analysis with respect to the pro forma and cash flow analysis, but some of the investors they might be concerned about all this nice cash flow it could be potentially gone with one fell swoop. Meaning, if a roof need to be replaced within a few years from now. Like you said, it could cost $5,000, and that unforeseen cost could throw off the ROI, the returns on investment that we just talked about. So, what are the? Do you have a
If I could
percentage?
just answer that. Say a roof does go. First of all, the price of the house will reflect the condition of the roof. If it's got a newer roof, it's going to be a little more expensive house. If the roof is only got 4 years left on it, I'm going to be selling it at a lower price. So say 4 years down the road, you have to replace that roof. All right. You have to say you spend $7,000 to replace that roof. Now that house has a brand new roof. So it's not like it's an expenditure that's lost money. That has now added to the value. That's a capital improvement to that house. And typically, if you put a new roof on the house, you've gained at least $7,000 in value on that house. So it's not really wasted money. It is an expense, and if you're looking strictly at cash flow, it does cost the cash flow, but it adds to the value of the house if you were to go sell it now with a brand new roof. So that's how it's really calculated. In other words, you might, if the roof has only got an expected life of 4 years left and you're buying it, let me turn that off, sorry. It's going to be selling at maybe 4,000 less than the price it would sell at with a new roof. And then 4 years down the road, when you put that new roof on, it's now worth $7,000 more. So it's not lost money, it's just money that's being spent at a different time.
Yeah, yeah, Keith, there's a very very good explanation, because something I kind of did not expect, which is good, because the in the past, the other turnkey providers that we work with, over the years in other markets, they may not use this very nice philosophy of doing business. So I'm very, very appreciative of that. So sounds like to me is what the investors getting with you is that because you understand turnkey investors from out of state and out of the country. So over the years, it sounds like you pretty much are able to address these kind of concerns. At the end of the day, it's all the numbers all works out. Like you just said, so the investors have confidence in working with your company all these years and moving forward based on your answer. So sounds like to me that you feel comfortable about the long term and short term returns on the properties, even though they might be older, and that should be very reassuring to hear. Okay, my next question is, let me see. Okay, yeah, some of our investors, they have done some, when they research your properties and your market. They use various websites such as Zillow and other sources. You and I know Zillow may not be all that accurate, and so what can you address some of the inconsistencies associated with some of the research that was done? They think, when they look at your inventory sheet, when they look at a specific address of your property that are available to purchase, and they saw on Zillow, they see some inconsistency with the prices, and they look at the comparables in the neighborhood. Zillow have the ability to on a video, sort of on a picture in a video, to go through the neighborhood, and the so yeah, how can you address the inconsistencies associated with the variance of prices from one house to another in a particular neighborhood, so they can make an informed decision? How do you address those? Yeah.
Well, we usually sell them rate around market value or a little less than market value. As turnkey, we don't sell them over the price, but we, Zillow is sometimes much higher and sometimes much lower. So it's really, a lot of what's happened in the Buffalo market is that the prices have gone up quite a bit, considerably in the last couple of years. So I think Zillow might be a little off in that. I think Niagara Falls is probably, the Zillow prices might be closer, but it's hard to say. I mean, I have to, I really have to look at it on an individual basis as far as whether Zillow is correct or not. But I mean, I own, well, my son is a real estate broker, and so we actually do a lot of selling properties. So we're pretty familiar with the values of properties and what they sell for on the market. So.
Yeah. Okay, that's a good answer. It sounds like to me, if I hear correctly, is that you understand all these concerns. However, because you know the neighborhood, you guys know the market in Buffalo so well that you price your properties correctly, and at the end of the day, it appraises, for the most part, and on an independent appraisal, the inspection gets done right. It confirms everything, and it's meets the market value at that particular point in time. So all right, so let me see what else. We are almost done. So a couple more questions here. Some questions, concerns about the type of tenants. I know this. Again, the homes are fairly old, and some of my investors like, or this kind of homes are fairly inexpensive. Like you said, like 40,000 to up to 100,000 or slightly more. But some of these rental homes that are you're marketing for investors, what type of tenants typically rent these homes, and how come? What has been the past track history of your tenants over the years, and in terms of the quality of the tenant. I mean, how long do they typically stay? Do they get evicted? And what are can you address some of these?
Well, the Buffalo market is extremely um, high demand for rental properties. So I mean, when we put a property up for rent in the Buffalo market, we typically get many people wanting that property. So we pretty much get our choice of tenant. They are still, these are renters, and in Buffalo, it's cheaper, a lot cheaper if you can buy a house than it is to rent a house, because you can see the prices are relatively low. So you can see a $45,000 house might rent for $750 a month. Well, certainly if they were able to buy it at 750 at 45,000, their mortgage would be substantially less than $750 a month. So they are people who are renting for a reason, and some of them are lower income people. Some of them have had credit issues. So they're in the lower end of the market, the 40,000, the 35 to $45,000 house. It's mostly lower income people. However, we do try to buy the houses in neighborhoods where it's not just all rental properties. I mean, sometimes you'll go to Cleveland or Detroit, and I'm looking at properties there, and I see, I mean, it's just all rentals. Every house is a rental. It's all investment properties. Most of the areas we're buying, there's a substantial number of homeowners to renters. So, and that's always usually a good sign, because the homeowners tend to be a little bit more careful in keeping up the neighborhood and their lawns and landscaping and that. So it tends to make the neighborhoods better. And if there's a problem with the tenant, they're quick to call. But so the lower end houses are going to be low income tenants. You can have issues such as evictions, but it's not that frequent. I can tell you this, that of all the properties I own in Buffalo, which is quite a few, we're collecting like 90, I think it was 97% of the possible rents to collect, we collected, which is extremely good. And it's been that way almost for the whole year so far. We've only had, I think we have over 100 properties that we either manage, and that's more than that in terms of units, it's like 160 or 180 units. And we probably only have, I would say, 8-10 evictions for the year, maybe an average of about 1 a month or 2 a month. So it's not a lot. Niagara Falls is a little bit higher. It's not quite the demand in Niagara Falls as it is in Buffalo. So there's a little bit more vacancies. But I try to buy properties too, Seewing, that are what I see good properties from a rental standpoint. In other words, a lot of the 1-bedroom properties, they tend to be ones that are a little bit more turnover because you got a single person living there, and they can be much more, they can move out at a lot easier, quickly than say a family that's got a 3-bedroom house. So I try to look at those things when I buy the houses, try to buy ones that are going to be good from a rental standpoint. Actually, the purchases that I make, these are houses that I would keep in my own inventory. So I buy them for myself, but then sell them, because I feel like if I like it, then other people are going to like it. And by the way, Seewing, I encourage any of your people to come into Buffalo and actually view the properties and see the neighborhoods and talk with the management companies. We feel that that's always a good thing. And I can tell you this, that most people, that when they come in, they buy. Pretty much, I can't really remember the last person that came in and didn't buy something. So they show very well. You'll see the neighborhoods. They're not desperate neighborhoods. Like when I went to Detroit and when I went to Cleveland and some of these areas, I mean, I wouldn't buy in those neighborhoods that they're selling the properties at really low prices. I just see trouble. When I went to Detroit, the guy told me that the property didn't have a furnace in it. And I said, well, how come the property doesn't have a furnace in it? He goes, oh, we have to take them out because they steal it when that property is vacant. I said, wow, I don't want to have a property in a neighborhood like that, especially if I'm buying remotely. I can tell you this, we have not had an issue with people stealing stuff out of our properties. And, that's not the areas that I buy in. There are some tougher areas in Buffalo and some tougher areas in Niagara Falls, but I don't typically buy in those areas. So you will see some lower price properties at times, but those aren't areas that I typically buy in.
Yeah, very reassuring to hear that. So, yeah, so it sounds like because of your company's core value and the fact that you've been in the Buffalo Niagara Falls market for so long, so you guys have credibility, integrity, and you do what's right for the investor. You sell the homes to investors on a decent neighborhood with the lowest possible bad issues like you just addressed. So that's so it sounds like you are putting to the best interests of your investors at hand. It sounds like you would buy or rent the houses that you are selling to out of state investors. So that's very reassuring to hear. That's why I like working with your company, because it's all about trust. And our investors from the Bay Area, we are like almost 3,000 miles away. We want to make sure that the properties that our investors are buying have a long term success, and they rely on what's on the ground. They rely on you and your in-house property management and what have you. So to sustain their long-term success. So one, I guess one final question, and thank you for your time once again. One final question could be, I know nobody can predict the future, nobody have a crystal ball, but since you are been doing your you've been running your business for so long. With respect to the rental market in Buffalo, if an investor would buy your properties now, what are the expectation and moving forward? Uh, the ownership of the property with respect to the rental market, the vacancy rate, the quality of the tenant, and the even a little bit of appreciation would not hurt. So tell me about the health of the Buffalo market from a big picture as we conclude this webinar. The economy, the job market, the population growth, and the health of the kind of the industry going on in Buffalo. Can you kind of share that from a high level point of view?
Yeah, Buffalo has seen a resurgence in its in the city itself. It has a lower unemployment rate than the national average. It's got a lot of new buildings in the city. It's really the home values have gone up considerably. I sell also to homeowners too. I buy and sell houses to homeowners. They're actually shown on the list that I give you, and that market is extremely strong. Even in Buffalo and in the surrounding suburbs of Buffalo, we're seeing substantial appreciation in the rental properties and in the homeowner properties in Buffalo. And we're seeing more and more properties that in the past I considered rental areas being sold to homeowners. So I think that's a good thing. Niagara Falls, I believe, is lagging a little bit behind Buffalo. That's why you'll see a little bit higher returns in Niagara Falls. But I'm already starting to see that Niagara Falls is starting to be found out, and we're getting more and more people coming in to buy in Niagara Falls. So that may be just a lagging behind of Buffalo in terms of the values going up. But the values in Niagara Falls have been more steady, but they're just starting now to creep up. So that might be a good thing. Nobody knows the future, but I'm very bullish on both Niagara Falls and Buffalo. And one thing I'd like to say, Seewing, too, about some of the questions that you've asked are sort of general in nature. It's really good to when you pick a specific property, I'm very upfront with whoever's buying and tell you exactly what I think of all the tenants that are there. So it really it's okay to ask on a very specific property these types of questions. And then we're, like I said, we've been in business for a long time. We're not trying to pull any fast ones by anybody. So I believe my prices are very good for the product that I'm selling, the specific property that I'm selling. So if one property is lower than the other or has a higher return, there's a reason for it. So and that's and I'm willing to explain why they're priced the way they are. But that's basically how we work it. So I know people will look at the sheet that I give you and see that there's a range of returns, and some of them will be either have a higher extent of rehab or they'll be in a higher value neighborhood. Those are going to have a little bit lower returns. Some people may prefer to have a little lower return to have a little better neighborhood and a better a greater extent of rehab on the property. So we'll even sell them in the tougher neighborhoods too. But I'll tell people, this one's in a little more riskier neighborhood, but the price and return is really high. It may have a tenant that's been there for 8 years or whatever, and no expectation of them moving anytime soon. They'll still can be decent properties. So I don't really, I kind of have a theory when I'm buying. There's no such thing as a bad property, only a bad price. So as long as it's the property's at the right price, I'm willing to buy pretty much anywhere. But I do tend not to buy in the tougher neighborhoods because, in my opinion, the prices of those properties would have to be very low for me to buy them there. But I do buy them if I get them that low, which I do once in a while. Uh, so that's the extent of it. Like I buy all over, all the various prices. Basically, anything that's a good deal, I'm buying it. It's just not that many good deals around in Buffalo right now, because there is, if you go into the multiple listings, you'll see that they're snapping up properties very quickly in Buffalo. Nothing stays on the market more than a couple days. It's got multiple offers on it. So that's why I'm out there. Most of the properties I buy, Seewing, are not listed properties. We have a lot of other means of buying properties, so it's very rare when we're actually buying one off the multiple listings, because they tend to sell at much higher prices than what I'm willing to pay. And that's why I can push the savings onto my my buyers.
Yeah, that's very good. That's very good to hear. Our investors, when they, when I prep them, when I consult with them, when they are about to pull the trigger, of course, I direct them to contact you directly, and specifically, in the morning, where you are in the morning, like right now, when you're readily available, and how busy you are every single second of every day. But at the end of the day, is the property you have on your inventory, they get sold very quickly because of your past buyers. Whenever a investor from out of town, wherever, whether from the U.S. or from overseas, once they buy your first property, rental property from you, they have good experience, and if they have more money, they can buy more and more, repeat buyers. So my investors are competing against your limited inventory. That, I mean, I assume you sell your inventory very, very quickly to out of state investors. And so I tell my investors also, you got to be motivated, you got to be serious, you got to be ready when you contact Keith Kanazi, because once Keith explained to you over the phone about the specific property that you want to buy from the inventory list, you better pull the trigger very quickly, because Keith has other ready buyers waiting on the sideline to pounce on it. So am I right? Am I right? Your inventory, although at
And we don't just sell out of state, we sell to investors here locally too. So we have a number of investors that locally buy from me also. So it's not just out of state or out of country. We sell a lot out of country, and we're selling into countries like Turkey even, and Israel, and UK, and all over. But we do sell to a lot of New York City, a lot of Toronto people, because they can't get this kind of cash flow in those areas, and California also. But we do prefer cash buyers, because the model is, the more we can turn over, the more we can buy and keep the supply going. So the cash buyers do tend to get a little bit of a preference in things, which I've, not hidden from you. So if you're a cash buyer, that's always a much preferred way for me. And we set, as you know, Seewing, we set them up with a attorney. We can form an LLC, a local New York State LLC if they want for them. We pretty much handle everything for them. We give them an insurance agent to contact for insurance, all that stuff. So we try to make the process as simple as possible, as like the name says, as turnkey as possible for them. We try to make it more of a passive investment. Wow. That's our strategy. And okay.
Yeah. Very, very good, Keith. Yeah, I mean, so I really enjoy working with you. You've been a very, very great with our investors. They enjoy talking to you. They enjoy buying from you, and I'm very, very passionate. I really love your system. I love the way you do business. So we will continue to feed you many of our buyers to your market. So looking forward to working with you. I understand. I really appreciate your flexibility in welcoming our finance buyers as well. I do my best to send you all cash buyers, but some of my investors, they may not have the financial resources to buy all cash, but you've been very accommodating. So I really enjoy working with you. So anyway, thank you very much for your time, Keith. And this, yeah. So we'll talk soon. I mean, we will have another future webinar similar to this when I when I feel more different kind of questions. We can do this kind of similar presentation. So, Keith, you have nothing else to say. Thank you for your time once again, and looking forward to continue to do a lot of business with your organization. All right.
Okay. Thank you, Seewing.
Have a nice day, Keith.
You too.